All right, what's going on, everybody? Back in the building, it's your boy Crypto Wolf, and coming at you with another little trading psychology video for today. It's gonna be a good one. Real quick, two quotes of the day. Your energy introduces you before you even speak. Think about that one. And throw me to the wolves and I'll return the leader of the pack. Damn straight. All right, so today's video is going to be about confidence. And why the hell am I talking about confidence? Because particularly with trading, you know, going in with the right mindset, going in with that confidence will keep you a little bit more steady, keep you from making some of those mistakes, from flopping and groping, from FOMOing, because it also takes a little bit to get to that confidence. And if you're taking those steps to build that confidence up, then you are kind of doing things right. And when you start doing things right, it starts working out for you, get even more confidence, and it just kind of snowballs. So let's get into it. We're over here watching. We got the ETH chart going. Still got a little bit of a long going at the moment. Nothing too much. What are we up, like 3.5%? So is what it is on that one. But all right, let's get into it. And the two main concepts of this little spiel I'm about to give here, you know, there's two main aspects of this topic of confidence. One is analysis, and two is mindset. So part of it is what you're doing, part of it is what you're thinking. Both, you know, obviously very important in trading. So what is confidence in trading? Well, confidence is a mindset, a belief that you feel secure in your position. You know, whether that means you are confident in yourself or confident in what you're doing, it can all add up to an encompassing confidence that you carry with you into everything you do, let alone just trading. Now, you don't even necessarily have to be like an expert in whatever task you are attempting. You merely have to have the confidence in yourself that you know that whatever you're doing, you will do to the best of your ability with as much mindfulness, attention to detail, and ambition as you can. Now, you know, some say to take pride in your work, but I think pride is something that kind of comes after the fact, or at least it should be. You know, you can take pride in your work, but do a shitty job. But, you know, if you do it 100% the way you know it should be done and not cut corners or be lazy, then the pride will kind of be like a byproduct of having done it well. Let's see, I'm getting a little shakiness back here. Money flow kind of coming down. It is a 1 minute, but I'll leave it on this one so there's more going on. Now, most people have trouble going into a situation with confidence if they don't already have that track record of success prior to then. And the only way I can think to do that would be to do as much preparation as you can, you know, before going in on it. So, like when you were in school, did you feel more confident when the teacher was passing out tests and you'd been studying the night before, days before? Or did you feel more confident when you sat down at your desk that day only to be blindsided by the fact that you even had a test that day and had totally blown it off or forgot about it until literally that moment? Now, obviously, being a little bit more prepared for it, I would imagine you would have more confidence, unless you're just a natural beast to begin with, or it's a subject that you don't even need to study for, which, oh man, ask me a story about that one sometime. I've got a really, really funny one. I may have been a bit of a slacker back in the day, so we're trying to make up for it. So with trading, even if you don't have a ton of experience executing and winning trades, you know, you can still greatly increase your confidence going into the trade by preparing for it. And I'm sure everyone watching this has sat down at the desk, you know, turned on the computer, looked at the chart, said, oh shit, look at that, and just hurried to enter a trade without doing much beyond just a cursory glance. Now, how often did those trades work out well for you? I know, like, personally, I can say for me, probably a friggin' 2 out of 10 win rate on spur of the moment trades. And that includes like breaking even, being a loss really. Yeah, basically not profitable. And so then how do you build that confidence to go into a trade that has a much higher probability of being profitable? Which brings us to that first aspect, analysis. Now, I'm not going to get into, specifically how to do analysis. We've done plenty of videos on that. This one is more about the psychology side of things, digging into the gray matter there a little bit. So the first one, learn about an entry strategy. And so how do you do that? Well, basically, you want to find, like, the easiest way, find people who are teaching how to find good trades, find good entries, or you can pay attention to common patterns and signs and indicators, market cipher being a very good one for that. Another example might be, if you got a big old sharp dip, maybe just your first most basic strategy is, all right, when we do a super dump, wait to see if it starts heading back up, watch to see what happens in the indicators. If it looks like it's not just a little tiny pullback, maybe try to go in on it or something. Not the greatest strategy because, you want to be careful about trying to catch a falling knife and all that, but I'm just giving like just a random ass example. Another way would be to take an idea such as that maybe and go back through the charts and back test it to see what happens, every time that situation occurs. Like, okay, we had a big old super dump right here, started coming up. Okay, well, in this one we pulled back a little bit after. Actually, technically we pulled back here and then pulled back again higher, but we did put in higher lows and then we kind of continued up. But as you can see here, we V-shaped up, didn't put in a new high, continued down. This time did put in a new high, but continued down. So obviously it's got to be a little bit more to it than just, hey, the chart looks like this. But you're going to want to go back and back test that idea, that strategy to say, okay, well, last time we were in this situation, it pumped. What about the previous time when we were in that situation? Okay, it didn't do much of anything. Like, you get where I'm going with this one. Now, the other thing is you want to do the prep work. Do you need to draw fib retracements, channels, trend lines, support resistance lines, Gann squares, whatever it might be that you like, that you're comfortable with, that helps you feel a little bit more confident, having some levels going, saying, okay, well, it looks like, if we get up to, if we get up to this level or something, then I'm going to start watching. If it's starting to weaken off, maybe we close it, maybe we take profits. And so the second part of the analysis would be testing that strategy. And like I mentioned before, going back through the charts and back testing, saying, okay, every time such and such happens, these are the various things that it does. This time it did this time it went sideways, this time it, bumped and continued down. This time we just kind of had this volatile up and down for a little bit, whatever it might be for your specific situation. And that gives you an idea of what the possibilities are when you are in that situation. What's it most likely to do? We'll get more into that here in a minute. And so another aspect of testing the strategy is different time frames, because you will see these same patterns playing out on a micro scale, playing out on a macro scale. And depending on what time frames you are trying to trade, whether you narrow it down and say, okay, I'm only going to look for trade entries on a 12-minute, or, I'm only trying to do trades on the 30-minute and try to do these longer swing trades, whatever it might be. But check, different time frames to see whenever a certain set of circumstances occurs, what happens. And then after that, you want to test it live. So not just going backward in the chart, but, as you are keeping up with the chart, maybe you set some alerts or something like that. And when it starts to happen in real time, look at it and be like, okay, what do I think it's going to do? What's it starting to do? What is it, what is it likely to do? Even maybe draw out whatever you need to draw out and then see how it plays out in real time. Because it's one thing to go back in the chart, and it's easy to say things when you have the rest of it right there in front of you. It's another animal in and of itself when it's a bunch of blankness over here. And then the next, logical step to testing it would be to start paper trading. Go down here into the trading panel over here on TradingView, or, use like one of the test nets on the exchanges, whatever it might be. I made a video about paper trading like last week. So if you want to know more about that, you can go check that out. Now, the third aspect of analysis is developing that strategy. So you kind of came up with the strategy, you started testing just at the most basic level. Now you want to develop it, and part of developing it is also gaining experience with it. So as you are testing and practicing, pay attention to the little differences in the price action and how the markets react to those situations. Again, let's just say, every time we dump, we're looking for a long or something. Every time we come down here and have a big green dot, maybe we're looking for a long. At that point, okay, when we get a big green dot, what's it doing? What's the money flow doing at the time? What's the RSI like at the time? All that good stuff. If that was your situation you're looking for, and you should have more than one criteria for wanting to start a trade, not just, hey, I got a big green dot, I'm gonna do the BitBoy and go in on it. You want to have at least a few different little aspects in conjunction together. But, just figuring out what the market normally does in that situation. Now, another would be figure out the framework for when your predicted movements have been invalidated. So say we're looking at the big green dot here. We're like, okay, we're coming up. Seeing two blood diamonds would probably have you looking a little bit nervous at that point. And again, this is the 1 minute, so it's, just ignore that for the moment. But, maybe you're thinking, okay, if we start coming up and we have a big pullback, maybe you're waiting until, you got a stop loss right here at the previous low, and you say if it goes beyond that low, that's invalidating it. I'm not going to ride it out. We're just going to cut it, and maybe we'll re-enter on the next low. Let's see. C would be figure out what a responsible risk management level would be for that strategy. Where would a good stop loss level be? Is it likely to pull back beyond that level before continuing in the direction you want? Are you entering on reversals? If so, how confident are you that a new low would invalidate your suspected trend? So, say it was this guy right here, and you're like, okay, we came dumping down, you're looking to go in on it. You're holding it, you start pulling back. At what point do you say, oh shit, and cut it? Because obviously, we continue down here. If it is, we go below, the previous low that kind of kicked off this little trade. Is it once we, reach that point, reach a little bit below that point, whatever it might be. But yeah, figure out, where you want your stop loss, as well as is the stop loss going to be your, your red line in the sand there, your cutoff point? Or are you thinking, okay, if we come back to 50% of that initial pump up, that you're going to cut there? Things to figure out. And again, going back and looking to see what happened in previous situations is going to help you determine that. Now, what type of price action could dictate a good exit or a take profit level? As well as, what type of price action would warrant adding to the position? If you're going in on this guy here and you say, okay, we're rounding over rather than just spiking up and back down. Are you saying, okay, that's not quite a bad, we're not quite going to cut it right there. Not to mention we came off of the moving average a little bit. Because had you, cut it right there at 50% of the original pump, look what you would have missed out on. So things you want to keep in mind. How long do you intend to keep the trade open? what signs would encourage or discourage you from doing that? If you're seeing, some super bearish shit like that right there, are you thinking, okay, maybe it's getting sketchy? Are you seeing lower highs up here? You're seeing divergences, whatever it might be. Think ahead of time to what you might see that would make you say, cut it, that's a wrap. Or what you might see to be like, you know what, if we see that, that's cool, we're going to ride it out. How long do you, I think I already read this one. How long do you intend to keep the trade open? What are you shooting for? Are you over here on the 1 minute scalping and you're like, okay, 15, 20 minutes and you're out? Are you over here on the 30-minute chart to where you're like, all right, well, this is probably going to be, what do we got here? Like a 5-hour trade or something? Things to keep in mind. Generally, you can do whatever. You can go back and forth between them, and largely it's going to depend on what the price action ends up happening. But, trying to stick to, saying like, okay, I'm just going to keep trading the 10-minute. As we go up, that's cool. I'm going to cut it. We come down. Okay, if it's still looking bullish, money flow coming up, maybe we'll go back in. Well, nothing special. Wrote it out, cut it. Went back in. You get the point. Now, do the same signs that signal a long entry signal a short entry as well? Are you just trying to go one way? Are you only trying to, do longs? Or if you start seeing the same signs but opposite, say down here or something, or up here, you're going to go in on a short too. Like, does your strategy work in both directions? At what points should you move your stop loss up to safeguard your profits? If you are coming in, we are pumping up here, are you still leaving it down here? Or are you doing the, the maintenance on that trade and watching, we're pumping up, then you kind of pull back maybe a little bit and then continue? Actually, right now is a pretty good example of, I literally just did that before starting this video. Originally I had a stop loss down here, and then I bumped it up to this point after we had that little pullback and then continued to the upside there. Not a terrible spot for me to move it yet, but we really haven't had much. Like, this is the only pullback we really had. I could move it down below here, but it's not a big pullback, and there are odds of it, coming back down here and still continuing to the upside. And that's what you want to watch. You don't want to move it up so close that just a regular, little oscillation is going to knock you out before we can, keep on continuing in the way you want to go. Now, kind of brings me to the last thing is, are you always letting the price hit your stop, or are you limit closing the trade? Are you just letting the trade go and you're, constantly kind of updating your stop loss and then just being like, all right, whenever it hits it, I'm good? Or, are you paying closer attention and you're, pumping all the way up here and you see a big pump and your stop loss is down here? You're like, well, you know what? Okay, maybe you run it up there. But if you're paying that much attention, really you would probably rather want to like limit out, do a limit order to close it. You're saving a little bit on them fees. And it's just as easy, dragging your little stop loss up the chart there. You just come over to, the bottom where it says close limit or market and just hit limit, hit OK real quick. It's that simple, at least on Bybit. So the fourth aspect of analysis is then doing it for real. We talked about the practicing, the development, the paper trading. At this point, you got to do it for real. Okay, sorry, I had to pause it right there. Speaking of maintenance, had to do a little bit on my trade. Not too bad. Closed it, ended up getting a little 4%er. Just because I'm really not paying enough attention, and we'll see what happens. But back to where we were. So doing it for real. So, when doing real trades, are you sticking to the script? Are you sticking to your plan. Let's see what's up with everybody else. Are you doing all of the prep work prior to entering the trade that you should have been doing? And is it working out in real time? Like as you were doing actual trades, are you doing the same thing you were doing when you were paper trading? Is it coming out different? Is it same? Things to keep an eye on. Are you having a hard time letting it play out? Are you entering and then, okay, you're going, but since there's real money on the line, maybe you're kind of like, you're kind of feeling a little bit iffy, and, are you cutting it too soon? Oh shit, like I made it just done. How often is the price action not doing what you thought it would? Are you, entering at a certain point thinking, all right, it looks like we're going to pump from right here, and it ends up just kind of going sketchy on you a little bit? It's just, how often were you wrong about what you thought it was going to do? And another one also, are you holding on to the trade too long? Are you holding through this pump and then just kind of continuing, and it's coming all the way back down and you erased half your gains? Sometimes it's easy to just kind of be complacent and be like, oh yeah, okay, we're up 10% or something like that, but okay, it looks like it's still going to go up further. You want to get that 15%, that 20%, and somehow you end up coming all the way back, and then maybe cut it and break even off of what would have been like a really nice trade. And continuing with the doing it for real, what is what's your win rate? How often are you ending in the positive? How much in the negative? How many break even? Technically, I kind of count break evens as basically a loss. It's just not making anything. What is your strategy's win rate? So not just, your total, how often the trades are going good, but how often are they going good when you don't deviate from the plan? On the times where you absolutely 100% stuck to the trade, like stuck to the strategy, what's the win rate on those compared to your overall if, you're having trouble sticking to that plan that you had prior to going in on it? Okay, so part 5, or the 5th aspect of the analysis, is the after action report. So, after you've closed the trade and you're kind of just take a moment to look back at it, think about it. If you really want to get better, you really want to put 100% into it, start keeping track of these things. Open up an Excel sheet, even Access database if you're particularly adept, and start analyzing what you're doing wrong and what you're doing right and why. So okay, did you end the trade too early, and why? What did you see that made you end the trade early? Analyze what you did correct. Did you reach a certain point where you're like, oh, okay, we're coming up here and I thought about ending it, but I stuck it out and it ended up continuing to the upside? If you can write these things down, all the better, because there's a lot of shit going on when you're trading, a lot of different circumstances, price actions, patterns, all that stuff. There's always little differences. It's never precisely the same twice in a row. I mean, it probably is, but what, out of a million times? So yeah, if you did something right, especially if it's something that you've messed up in the past, make a note of that and be like, hey, I did this and it was the right decision. What do you need to work on still? did, maybe it was a winning trade and you're like, okay, you came up in the green, but maybe you could have done something better. Make note of that. What are you still struggling with? What are you having trouble with? Whether it be your analysis or, your mentality. And how did, looking back on the trade, how did that particular price action affect your strategy? Was it super volatile? Did it just pump to a parabolic top? Did you have strong pullbacks? Did it end up going sideways? What did you do when it did? And what do you think you should have done if you think it should have been different? Because you have kind of your plan, like, okay, so you're pumping up. Maybe you figured, all right, you're going to go in on a short right here. You're getting bearish divergence. Like, all right, we had a nice big pump, tend to have some pullbacks after that. Maybe you go in on it and okay, we only got to here, but then we continue back up, and now we're having this volatility as we go sideways. How, and say you just stuck it out and hung in there, or maybe you got frustrated. Maybe you saw a couple blood diamonds, was like, oh shit, it's gonna go down further. Oh, if you're longing, I guess we're shorting right now, but you see it start to pump back up and you cut it, and you'd probably be at like a break even right there. Make note of, what the price, what happened and what you should have done differently. And that's pretty much my spiel on the analysis aspect of it. As far as like, actual levels and golden pockets, support resistance, all that good stuff. Plenty of videos we got on that. Plenty of other people doing videos on it too, but screw them. You want to watch my videos. But we're going to get into the second part of the confidence game here, and that is the mindset. Because, doing the analysis will help you be more confident when you start the trade, as you're going into it, as you're maintaining it. Because, you've laid out your levels and all this good stuff, and you're like, okay, when we reach this level up here, I'm expecting some resistance. And when you come up and it hits and it does start going sideways, you're like, aha, see, I knew it. And it helps you be more confident to make more confident decisions about that trade. But the other aspect is the mindset. So, half of confidence is believing in yourself. Because I know there's a lot of people out there, myself plenty of times too. I'm not saying I'm friggin' perfect. I'm just doing this to help myself with these particular issues as well. And if making this video helps me get better at it, well, fuck yeah. So, if half of confidence is believing in yourself, you can stack the deck in your favor, though, so as not to just be lying to yourself. Because it's one thing to be like, all right, I'm going to be super confident, big dick energy. We're coming into this. We're going to fuck this trade up. It's going down. We're going to win. And if it goes the other way on you, just because you were, the only thing you really had was just some positive self-talk, which, don't get me wrong, you want that, and it goes bad on you, that's kind of going to just like crush that confidence back down even further. So you want to stack the deck in your favor. They say, never go into a fair fight. You never want to fight to be fair, particularly, a life or death fight, because when it's life or death, winning's the only option. And so being familiar with your strategy and having clearly defined rules takes the guesswork and the uncertainty out of it to a degree. If you have your strategy and you say, okay, we're going to enter when we see this, and when we get to a certain point, if we see bearish divergence, we're going to cut the trade. And at that point, you can have confidence because you know what the plan is. You know what you're going to do ahead of time. And when you go in, it pumps, see the bearish, you cut it. You're like, cool, that was easy. Like at that point, it was mechanical, really. Now, going into a trade, knowing that you have a good idea of what you're doing makes it way easier to truly believe that you can do it and do it well, because you're not just going in blind. Imagine you're going out playing paintball or something like that. If you're going in blindfolded, you're going to be a little nervous because you're going to get shot in the damn face, because you won't even be able to see who's aiming at you. Same concept. You go into a trade blind, you're going to have that uncertainty, that doubt, that fear, and you'll be more likely to make a poor decision. Now, specifically with the mindset, there is a mind over matter kind of thing going on. You do need to train yourself in your mindset. So, sit down at the computer like you're the baddest motherfucker to step on the trading floor that day. Again, just, big dick energy. Sit there, play some good music that gets you pumped up to kick some ass. Sit up straighter, sit on the edge of your seat, stick your freaking chest out, sit there like you're the boss. Just be the badass. Like, don't just think it, live it, and carry that into the rest of your day as well. Even when you're not trading, whether you're at work, you're at the freaking grocery store, walk around like you're fucking 10 feet tall and your shit don't stink. And believe me, it will bleed into other areas of your life. It will, bleed into trading, whether or dating or work. When where do we go here? But yeah, and we're going to come back to this little topic here, but also, when you see your entry criteria for a trade being met, attack that shit. Like, don't hesitate, don't second guess it. You saw however many of your criteria for entering a trade, checking those boxes off. We say, okay, we saw that, money flow, saw that. 4 out of 5, we're good to go in on it. Don't keep second guessing it. And that's why it's also helpful to keep it a little bit simple, rather than jumping around on every single time frame. Maybe you have 3 time frames that you check. You got your long term, your mid term, and then your short term for finding a specific entry or something. And when you see those signs popping up, don't get all wishy-washy. Don't be like, oh, okay, we got some bullish divergence here. We got a little green dot VWAP crossover, money flow kind of coming up a little bit, RSI's coming up. Don't be like, well, okay, well, I don't know, the RSIs are split a little bit, and we just had, two blood diamond. Like, fuck that, attack that shit, just go in. Worst case scenario, you break even or something. Because I mean, in most cases, you could cut it at a break even point. I lost my spot. Oh, and on top of that, at most, maybe double check that, with those criteria. You go through, you see all this, say, okay, you come up here and you look like, okay, yeah, we're generally like looking like we're gonna head up on the 15, come over to the hour. Yeah, we're generally heading up on the hour. And you come back to 4 or whatever it might be, and you look and you're like, okay, well, it's we're getting divergence and this and that. Okay, it's time to go in. Like, you went through, you checked it, you saw it, that gave you the idea, you did your little confirmation, checked a couple time frames, came back, just double checked, it's good, it's confirmed. It's not like you're not seeing a crossover like on the current candle or something. You're one candle past, so okay, it has confirmed. At that point, go in on it. Now, number 5 here is act as if. I don't know, if you guys have ever heard this saying before. Act as if. Act as if you just hopped out of your Ferrari, sat down at the computer, and are putting up $1 million trade. The actual amount is irrelevant. You should be trading the same way, whether you are trading with 10 million or $100. It should not change your strategy and those rules and guidelines that you laid out while you were developing that strategy, while you were practicing. Just same shit, different day. Act as if you are completely untouchable and can beat anybody's ass who even looked at you sideways. Just doesn't even matter if it's true. Just continue telling yourself and imagine, okay, if that were the case, how would you act? What would you be thinking? How would you feel? Like you'd be feeling like a badass, and when you saw those signs pop up, you'd be aggressive. You'd just go in on that trade. Wouldn't hesitate, wouldn't pussyfoot around, nothing like that. And this stuff carries over to the rest of life as well. Not even just trading. You could be, on the court playing basketball, or at the freaking grocery store, or at the gas station. Again, chin up, shoulders out, chest up, stand up straight. Act as if you do have that confidence, even if you don't, even if you've been struggling with that. Act as if you're the best catch out there, and these women, or guys, ladies, would be lucky to get your attention. Act as if you win every trade you've ever done, every trade you enter. Your previous trades are completely irrelevant at the moment as you are looking or starting this particular trade, and future trades don't even exist. Just don't even think, completely out of your mind. Doesn't matter. It's not even real. This is the one, potentially, the life changer. This could be the big trade. You can't even imagine fucking it up because you're a badass. You're going to stick to your plan. You're going to stay strong. You're not going to start getting fear and doubt. You're not going to start getting all flaky and flopping and groping because you know what? Again, you just hopped out the Rari, sat down at the computer like you're the biggest badass in the world. Badasses aren't going to sit there flopping and groping. They're going to stick to the plan. They're going to do the damn thing, and they're going to win the trade, which is what you're going to do. And this is a pretty good quote here, and I'll explain where it comes from after, but take responsibility for the fact you created everything in your life via your thoughts, beliefs, focus, actions, and energy, and that you have the power to shift your mindset, raise your frequency, and create new things that will serve you better. Get out of the victim mode into badass mode and be diligent about your mindset. Don't just let it go whichever way the wind blows. You have control over your mindset, over your thoughts, over your emotions, over your actions. So take control of that shit. Don't just let it be led astray by, whatever's going on a chart or whatever somebody said in a YouTube video. If people were saying they're super bearish and everything's going to get wrecked. Doesn't matter. Matters what you think, what you feel, what you make yourself feel. And that was by Jen Sincero, the author of You Are a Badass. I actually have, let me see here. I think I got the cover of the book. Yes. So, right here, awesome book. I very, very highly recommend it. And after you get finished with that one, go and check out her second one, You Are a Badass at Making Money. Trust me, you're going to like it. Even if, it's not everything that's in there, regardless, get into the self-help books. I'm telling, like, it's not gay. It's not freaking weird or anything like that. Like, I'll touch on that here in a second. So, where did we go? Another good quote here is, everyone wants to be a beast until it's time to do what beasts do. And thinking of, in this case, trading, somebody who's just an absolute beast at trading, a freaking monster. They're going to sit down. They're going to, do their little prep work. They're going to go in. They're going to look for those signs that, hey, all right, this is my trade right here. That's what we like to see. That's what I've been waiting on. Attack that shit. Another, what do you imagine the ultimate badass trader does when he or she sits down at the computer and opens up the chart? What's their mindset as they're walking to their desk? And what's stopping you from thinking like that? Odds are it's probably yourself and nothing else. Because it really doesn't matter if, you haven't been super profitable. If you don't have 100 grand on your account, That's still not stopping you. That's just an excuse. Okay, so the next little part of the mindset here is, improve your mindset and the confidence will follow. There's a famous quote, free your mind and your ass will follow. I think that was from Platoon even. Self-help books are like a shot of adrenaline for that thought in the back of your mind that you can do better. So read that shit, for real. It helps. Personally, I like the ones that don't mince words. Like if I could have a drill sergeant literally just like curse me out every time I started straying from the path a little bit, I would gladly pay for that. Granted, I don't have enough to pay somebody full time to just sit there and bitch at me all day. But to be clear, what applies to, talking about these self-help books, because they're going to be focusing on most likely things that are not trading or specific to trading. But, what applies to starting a business or, hustling your ass off might not 100% apply to trading. So just be aware of like the emotions that can sway your decisions. You may be a badass motherfucker, but you need to trade like the Iceman. So even though you're getting yourself pumped up and going in, you're badass, sticking your chest out, don't let that make you overconfident that you ignore those signs that you've kind of laid out ahead of time of like, okay, if we reach this level, I might cut it or I'm going to take profit. So don't get overly cocky to the point where you start ignoring your own rules. Just to be clear there. Now, if it's important to you, do it every day. Otherwise, why waste time on it that could be spent doing something that you do want to do? Even if it's only learning a little something to help make you better at it, just always be moving the ball forward. And, the biggest detractor from that confidence, once you've established a solid strategy, is going to be taking L's. Don't let them pull you back down, because losses will for sure happen. I mean, even the biggest badass traders in the world take losses. It's just a part of life, a part of trading. And half the reason to practice risk management is to keep those losses minimal and from them, beating you down psychologically. Having little losses, okay, you brush it off your shoulder. As long as you're keeping them small, you can ignore them emotionally. So, take what information you can from it and just leave it in the past. It's done. Being butthurt isn't going to bring that money back. Probably the opposite. You'll be more likely to throw more money away because you're revenge trading or something. Now, at the very least, improving your mindset will be better for you, and not just in trading, but every aspect of life. Life's too short to be timid, to be soft, to be overly passive. If you're hanging around me with this channel, then you know what? You're a fucking wolf too. So act like it. Leave the weakness for the sheep. You don't have to look like Dwayne "The Rock" Johnson to be a badass. I mean, I've seen more dudes who, just looking at them, you would not pick them as like your top fighter to somebody to like have your back, but who would absolutely destroy anybody once they flip that switch. So it's not about what you look like, it's not those superficial things. And so here's an interesting tidbit along with that. So, something that members of the famous, first Special Forces Operational Detachment Delta, or commonly known as Delta Force or CAG, they commented that when they first went to selection, it was never the ones who looked the toughest who ended up making it. Like the big cock diesel looking motherfuckers usually dropped out of the course. More often than not, it was the average, medium-sized, unimposing guys with the intelligent eyes who could hold their own, but, could also think under pressure and, drive themselves forward that did the best. So, don't discount yourself from the archetype of what a badass could be just because you can't bench press more than your body weight or run a 5-minute mile. There's more than one way to win a fight. Just as there's more than one mold for being a badass. I mean, look at, Elon Musk. Dude runs everything around him, super marketable guy. Basically, he's the whole reason that Tesla stock is propped up as high as it is. And, you know, when you look at him, you think like, oh yeah, dude's badass. He speaks his mind, all this and that. But he's not physically imposing. He's not, you know, what average people would consider, you know, a badass motherfucker if you seen him at the bar and shit was starting to go down. So just, you know, don't discourage yourself from being that badass because of, you know, whatever, how you look, anything. Now, once you legitimately get used to seeing yourself as a badass, you know, gaining even just a little bit of confidence, you'll be surprised at how things start working out differently. You know, maybe you get that raise at work after your boss notices just something different in you that, you know, catches his eye. Like, oh, okay, you know, like, it seems like he's doing good. He's working hard. Like, maybe we, you know, maybe give this dude a raise. You know, maybe you stop half-assing your trade entries and you start to see your win rate pick up. You know, maybe just so happen to, you know, get a girl's phone number at the store after, you know, always wondering why no one ever paid you any attention before. You know, the universe loves a commanding presence. Regardless of whether the law of attraction is real or not, things do tend to gravitate to those people with the right frequency going on, you know? Like, everyone can always just tell when someone walks in the room and they're just glowing with that certain vibe or aura. You know, being a badass and knowing you have that confidence is just visible on subconscious level. It's just inherent to being human, I suppose, and we see it in other people. And the more you do it, the more things will start lining up in your favor, and the more confidence you will develop, and that will carry over again into trading as well. Now, confidence doesn't come from lying on the couch, eating Cheetos, watching Hulu, drinking fucking Mountain Dew. You know, God does for those who do for themselves. A wolf is not going to wait for food to come to him. It seeks it out, becomes a better hunter, develops its attacking skills. You know, a wolf doesn't have to be the villain, despite what the fairy tales may say, but can just be a bad motherfucker who chooses to do good things. Which is kind of, you know, my image of the wolf that, you know, I kind of resonate with, I guess you could say. You know, they talk about, you know, you have sheep and you have wolves, and then you have like the protectors who are the sheep dogs. Well, fuck it. I'm a fucking wolf dog because, yeah, maybe I used to be a little bit of a wolf. And eventually, you know, you grow up, you mature, you start doing better. And just coming from that, I try to keep that mentality in perspective where, you know, no, I'm not just gonna fucking lay down and do it, you know, exactly what anybody friggin' tells you to do. And at the same time, try to maintain that go get it attitude. Semi-unrelated, but, you know, better to be a warrior in a garden than a gardener in a war. Bruce Lee said that. Interesting quote. So again, better to be a badass sitting down in front of the chart and getting ready to do some trades than, you know, slouching back in your chair, slacking off and being like, I don't know, maybe I'll go long. You know, jump on those entry confirmations. Be confident in your strategy enough to ignore the little fluctuations in between. You know, you're pumping up over here, and you get these, you know, little fluctuations, oscillations, these little retracings. You know, be confident enough that you're like, nah, you know what? I saw it was going up. It's fucking going up. If for nothing else, then because I fucking told it to. And, you know, you hold out and bam, there you go. To wrap this up, we'll quote the late great philosopher Jadakiss. I'm not cocky, I'm confident. Exactly. But you know, cockiness can be warranted once you've earned it. And at that point, it is basically indistinguishable from like a justified pride. And, you know, everybody always says, take pride in your work. Well, you're not going to take pride in your work if you're doing a slack-ass job or you're not actually putting in the work, and need to look at trading as a job. Look at it as work. if your job is running a CNC machine, you're not just going to walk up to the machine and hit the go button having looked at or done absolutely nothing. You're going to fucking crash that thing, and it's going to be like, boom, and the boss is going to come over and be like, what the F did you do? I walked up and hit go. I thought it was good to go. It's be like, well, I think you're good to go. Get the fuck out of here. Same thing. You need to go in. You need to do your setup. You need to figure out where you're at. Figure out where your levels are. Figure out, what you expect it to do. And again, looking for those entry confirmations, whether it be like right here. Okay, we got bullish divergence. That's the first thing I'm looking for. We got VWAP cross up, money flow. It's in the green, but not super great. RSI is kind of heading up a little bit. Yeah, there's your friggin' trade entry, which ironically was my trade entry. But all right, what do you guys think? How you feeling about this one? Where do we go? 50 minutes? We went on a little bit, but remember, you guys are here. You're family. You are part of the little wolf pack here. Talk to me in the comments. Say what's up. What do you think? What are you having trouble with? Did you like any of this? Did it make sense to you? Am I just talking my ass off and rambling about some shit that maybe I don't even know about? Let me know. This it doesn't have to be just video and viewer. Yeah, get at me, dude. I can talk my ass off by this point, so by all means, say what's up. Talk to me in the comments. Get a little chat going. But yeah, I hope you guys got something out of this. I hope it was helpful. And I shall see you next time. Stay free and be a fucking badass.